Welcome back to the Deep Dive. Today we've got a very specific mission. We're actually going to skip the usual chat about which AI is smartest. Instead, we're zeroing in on the financial plumbing, the logistics underneath this whole multi-trillion-dollar AI boom.
Yeah, if you want the shortcut to understanding how this revolution really works, mechanically speaking, this is for you. Our sources are showing it's not just about clever software. It's driven by a kind of closed system, a loop, really, involving power, money, machines. Some analysts are even calling it a new kind of circular economy, but one focused purely on compute, contracts, and capital.
That's absolutely the core idea we need to unpack. Most folks see the shiny end products, the apps, the models, but we're diving underneath all that, into the foundation, this structure, this great AI loop, as it's sometimes called. It pretty much dictates who wins, who gets funded, and ultimately who pays the massive bills. We really have to follow the money here, because understanding that flow, well, it's key to grasping how stable, or maybe how fragile this whole industry might be. Okay, let's do that. Let's trace it back. Where did this loop actually begin? Every revolution has a spark, right? For AI, it seems like it was the raw, fundamental need for compute power. Specifically, you had pioneers like OpenAI needing just astronomical amounts of GPU power, billions of dollars worth early on.
Exactly. And that initial demand, it was so huge, it basically created the first circle almost instantly. The billion-dollar trio, you could call it. The sheer scale needed meant someone like Microsoft had to get involved very quickly. They brought the platform, Azure Cloud Services, which really means these enormous purpose-built data centers just packed with high-end GPUs.
Right, and those data centers, they don't just run on anything. To be efficient, they need specific hardware. The sources make this dependency chain crystal clear. OpenAI's models, they run on Microsoft's cloud. In
Wow.
Microsoft's cloud, it runs almost entirely on NVIDIA's chips.
And what's really fascinating is the immediate feedback loop that kicked in. Microsoft started buying GPUs on a massive scale, driven by OpenAI's needs, and that directly translated into NVIDIA's stock price just soaring. The money flow was instant. OpenAI's contracts funded Microsoft's cloud build-out, which in turn meant guaranteed huge hardware orders for NVIDIA.
And boom, the AI circle starts right there. Demand feeding supply, supply enabling the next bigger AI models,
Yeah.
which then just cranks up the demand again. But okay, here's where the analysis suggests things got more complex. That core loop apparently wasn't quite enough on its own.
That's right. It had to expand pretty quickly. It created not just one loop, but more like a loop within the loop. A system almost designed, it seems, to accelerate things and maybe spread the risk, but among a very, very narrow group of companies. And this expansion, this is where analysts really started to, raise their eyebrows about where the value was truly coming from.
Okay, let's track that expansion. So beyond that initial trio, who else got pulled in? Other big infrastructure players must have seen this guaranteed demand, right?
Oh, absolutely. Take Oracle, for instance. They jumped in, striking these massive deals to build new AI data centers. And importantly, many of those were specifically commissioned to handle the kind of scale OpenAI and others needed.
And to build those data centers, Oracle needed.
They needed the same thing, NVIDIA hardware. Huge amounts of it. So the demand ripples outward to different cloud providers, maybe, but the end point for the hardware spend, still incredibly concentrated with NVIDIA.
Okay, and then you get these sort of intermediary players, which seem to really highlight the financial engineering involved. Let's talk about CoreWeave. The sources flag this one specifically.
Yes, CoreWeave is crucial to understanding the next layer of the loop, because it's not just some random company leasing out GPUs. The key detail is that CoreWeave is part owned by NVIDIA itself.
Ah, okay. So NVIDIA invests in CoreWeave.
Exactly. And then CoreWeave turns around and leases GPU power, often NVIDIA's own latest chips, back to labs like OpenAI and even their competitors.
Okay, that's the aha moment the analysts point to, isn't it? This idea of recycling value.
Precisely. You see the same pot of money rotating through the same few hands, but in ways that benefit the core players. Think about the flow again. OpenAI pays Microsoft for cloud services. Microsoft uses a big chunk of that to pay NVIDIA for chips. Then NVIDIA takes some of its profit and invests it into CoreWeave.
And CoreWeave uses that investment capital to buy more NVIDIA chips.
You got it. Which they then lease back out, often to the very same players like OpenAI who started the chain.
Why does that matter so much financially? What's the strategic advantage there?
Well, it effectively creates a guaranteed, almost closed market for NVIDIA's high-end chips. By investing in CoreWeave, NVIDIA does two things. First, they help finance one of their biggest potential customers. They make sure CoreWeave has the cash to buy their most expensive, highest margin products. Second, they're kind of de-risking their own sales pipeline. They ensure a portion of the revenue they just got from Microsoft flows right back to them through CoreWeave buying more chips. It's an incredibly efficient financial architecture, self-reinforcing.
Ingenious, definitely. But okay, now we hit the big question this raises. When you see this kind of, well, tightly circular dynamic, you get wildly different takes on what it means for the market's health. Is this sustainable? Is it real growth? Or is it just, financial engineering?
Yeah, does this structure actually generate new economic value outside the circle, or is it mainly just creating really powerful internal momentum? That's the debate.
Let's tackle the skeptical view first.
Yep.
The critics. They have this rather pointed term for it, the AI merry-go-round. What's their main evidence? What makes them say this is mostly hype, not real growth yet?
The core of their argument is that this system right now is largely propped up by, well, yes, hype, but also massive VC investments and this insatiable hunger for compute that's essentially paying itself. They make a really crucial distinction. Genuine economic growth happens when someone outside the AI bubble pays for a finished product or service, a farmer using an AI app for crop yields or a factory using a model to optimize production. That's external revenue.
Okay.
Versus internal momentum, which is when the revenue being reported is mostly just money changing hands inside the loop, like OpenAI paying CoreWeave for compute needed just to train the next model, or Microsoft invoicing an AI startup for infrastructure. If most of the big numbers we hear are just variations of OpenAI paying CoreWeave, which pays NVIDIA, which invests back in CoreWeave, that's internal churn. It's not proof yet of a profitable end market with real customers.
That's a very clear distinction.
Okay.
But the companies in the loop, the Microsofts, NVIDIAs, OpenAIs, they obviously push back strongly against the merry-go-round idea. They argue this isn't about fragility. They call it coordination at scale. What's the logic behind their view?
Their defense is basically that this tight alignment, this concentration of money and effort, isn't some trick. It's actually necessary. They argue it's a self-reinforcing ecosystem, yes, but one that radically accelerates innovation because all the key players are rowing in the same direction with their infrastructure bets. In a race this expensive and this fast, they see concentration as a feature, not a bug. It avoids duplicated effort, speeds up deployment of the next generation of tech.
And I suppose if you zoom out historically, that argument echoes previous big technological shifts, doesn't it?
Absolutely. Supporters love drawing parallels to past industrial revolutions.
Right.
Think about the immense capital concentration needed to build, say, the national railroad networks, or the vertically integrated giants that controlled the early oil industry. Back then, one invention directly fed another. Better steel made better rails, which needed more oil for transport, and so on. That loop eventually became the new normal. So the argument is, this AI loop is like a necessary, maybe temporary concentration of power needed to build the fundamental infrastructure for this new era.
But there's a key difference highlighted in the sources. Unlike steel or coal, the fuel for this loop is different. They identify it as data, energy, and trust. Talk about that.
Right. Data is obvious, energy less so, but critically important for the data centers. But trust is the really interesting, maybe hidden variable, and it's not necessarily consumer trust, not yet anyway. It's investor trust, and it's structural trust within the loop. The whole system relies on investors believing the next AI model will be bigger and demand more chips. It relies on cloud providers trusting that labs like OpenAI will keep needing more capacity, and it relies on NVIDIA trusting CoreWeave will buy its chips, and CoreWeave trusting OpenAI will lease them. This belief, this trust, allows the absolutely massive capital flows needed to keep the whole thing spinning.
Okay, but relying so heavily on trust, especially investor trust, sounds inherently risky. Even with these companies having trillion-dollar valuations, we need to look at the weak points. Where could this highly concentrated system break down?
We definitely do. And the sources point out several potential fragilities. I mean, what happens if that relentless demand for more and more compute just plateaus? Or even slows down significantly, and maybe even more critical is the upfront cost. Training one of these huge foundational models costs billions. That's a massive sunk cost. What if the models, once trained, just don't generate enough ongoing revenue from actual users to pay back that enormous initial investment? If that happens, this tight financial circle could unwind just as quickly as it came together.
Yeah, that failure to recoup the massive compute cost really feels like the potential Achilles heel here. And the fragility isn't just financial, is it? There's a significant environmental critique, too. This circular economy might not be very green.
No, indeed. Critics often describe it as gray. It's built on just staggering amounts of electricity and water needed to cool those huge data centers. And furthermore, the loop itself demands constant hardware upgrades. The minute NVIDIA releases a faster chip, the previous generation starts looking obsolete for cutting-edge training. This creates a cycle of, well, hardware turn producing, using, and then replacing expensive equipment relatively quickly just to keep that coordination at scale going.
So it's a structure built for speed, for sure, but maybe at the cost of sustainability, both financially and environmentally, if things don't pan out. Is there an optimistic path forward? Can this loop evolve into something genuinely sustainable?
Well, there is a hopeful angle in the analysis, yes. The basic infrastructure is now being built at an incredible scale. The capital commitment is there. So, the belief, or maybe the hope, is that the loop can mature. It could evolve into a system where perhaps compute resources are shared more dynamically, more efficiently, and critically, where the huge energy footprint is genuinely addressed with renewable power sources built right alongside the data centers. The framework exists. The focus needs to shift from just building bigger to building smarter and greener.
Okay, that feels like a good place to wrap up this deep dive into the, let's call it the financial heartbeat of the AI boom. We've traced how the money flows from the AI labs needing power, to the clouds providing it, to the chips enabling it, and back again through investors funding inventors, fueling this cycle where imagination requires massive infrastructure. Every revolution needs its rhythm. And AI's current rhythm is definitely moving in these very specific, very concentrated circles.
And maybe here's the final thought for you to mull over. This whole intricate, great AI loop, for all its technological and financial complexity, is ultimately only as wise and perhaps only as stable as the human decisions guiding it. Yes, it runs on data, energy, and that crucial financial trust we talked about. But at the end of the day, the choices about where to invest, who to partner with, how much risk to take, those are still human judgments operating within this very unique, closed system. How human intelligence steers this powerful loop, well, that might be the biggest question of all.